Let's talk about Morgan Stanley's viewpoint on cryptocurrency. And this is coming from the Daily Hodl. Banking giant Morgan Stanley says Bitcoin and crypto adoption among institutions slow to pick up. Now, initially, obviously, this title looks to be slightly negative, right? If you read this, it's like, oh, adoption is lacking, blah, blah, blah. But if you really get into the numbers behind it, I don't think necessarily that's true. So keep that in mind as we go through this article in particular. The Daily Hodl's perspective is not my perspective when I read these numbers. Banking giant Morgan Stanley says that blue chip investors are reportedly lagging behind in terms of investing in Bitcoin and crypto. According to a new report by the Financial Times, strategist Sheena Shah and Kinji Steinmetz from Morgan Stanley published a recent note revealing that a record-setting number of Bitcoin has not moved in over half a year. Quote, a record number of Bitcoin units haven't been used for any transaction in the past 6 months. Currently at 78% of total, and this number continues to rise. Now, a lot of people say that this is bad for adoption because people aren't purchasing into Bitcoin. But you have to take into account that we are pretty much in peak crypto or bear market, in peak like crypto winter at this time. And of course, adoption is going to slow down. And this is better news to have 78% of it not being touched for the past 6 months than to see a majority of the Bitcoin move into an exchange. What we've seen here recently is a bunch of Bitcoin move out of exchanges, with the greatest removal of Bitcoin in one day being removed from Binance. Something like 58,000 Bitcoin in one day moved out of Binance. And that means that essentially the idea of Bitcoin being a reserve currency is becoming more and more what the reality of it is compared to what, we saw during the bull run previously. And this is where we get into like a ton of different conversations surrounding cryptocurrency, because Bitcoin fundamentally, and what a lot of people say it is a hedge against inflation. And if you have 78% of the currency not being utilized and basically being stuck into private wallets and held, is that how people are generally perceiving Bitcoin at this point? Has the perception of Bitcoin shifted? At least the perception of Bitcoin from the people that utilize Bitcoin, right? Because that is another point that we have to talk about. Yes, what this shows is that we have essentially less adoption, new adoption coming into Bitcoin. But what it also shows is that the people that are participating within Bitcoin, that believe in Bitcoin, are holding on to it for dear life. And that is where the interesting part comes in, especially as we move through all of the shifts in the fiat reserve currency of the US dollar, and what is coming with BRICS down the line between Saudi Arabia, China, and Russia, as well as Saudi Arabia accepting the yuan. There is a weakening of the US dollar. There has been a weakening of the economy globally, and a lot of people have started to move into reserve currencies like the US dollar. And so the people that are utilizing Bitcoin as a reserve currency appear to be moving into that reserve currency and not moving back out. And if we look at the charts, everything here that they're talking about as far as the amount of transactions being reduced and this Bitcoin not being touched does appear to be active, because as we saw back in June, about half a year ago, we had a big dip in cryptocurrency and Bitcoin specifically, and it's kind of ridden sideways since then. Now, what this means, if we oversimplify a bit, is that those who bought and received Bitcoin more than 6 months ago are holding on to their positions, with some likely waiting for a price recovery. According to the analysts, the remaining 22% of Bitcoin in circulation are owned by short-term holders, or entities that have purchased their Bitcoin in the last 6 months. The analysts add that the shorter-term investors have an average break-even price of $22,000. Looking at the activity of blue-chip investors, Morgan Stanley strategists say that even though institutions have cited consumer demand as means of offering crypto-related products to traders over the last few months, the demand hasn't picked up quite like they hoped. In recent months, traditional finance companies have increasingly been announcing new crypto products to offer their clients exposure to the markets and facilities to be able to buy, sell, and hold their underlying crypto. The companies are saying that they have introduced the products due to client demand, but looking at the recent flows in and out of the exchange traded products and the trends for trade volumes described above, we continue to think that unless there is material upward price volatility, it may be difficult to see that real demand pick up materially. So the idea here is that only 22% of this has been purchased in the past 6 months, and the 78% is basically holding on because the price of Bitcoin was before that big dip in June. And I could see that definitely for sure being a part of the case. Everybody that purchased back in June is holding because they're in at a loss. But then if you look at essentially how many Bitcoin wallets are in profit right now, the number is 75%, which seems to be a little bit counterintuitive to what is actually happening here. So I think it's going to take a little bit for me to go over all of the numbers, and I'm definitely going to be doing it. And I'd like to hear your thoughts and opinions in the comment section below, as well as the live stream. Is this a positive or negative for Bitcoin? Does this signal Bitcoin as being a viable reserve currency? And then obviously, if we're going to talk about cryptocurrency and specifically Bitcoin for transactional currency in the future, we'll do it there. My thesis, as it has always been here recently, is that we will see crypto being utilized to move into a reserve currency, the US dollar, right, via stable coins. And eventually, if the reserve currency of the US dollar is weakened by things like BRICS and the Chinese yuan, then we would end up seeing essentially a move into a specific cryptocurrency like Bitcoin, more than likely Bitcoin, as the next reserve currency. So a consolidation into US dollar and then a consolidation into Bitcoin. Now, how far off is that, and is this financial advice, etc.? Obviously not financial advice. I could be completely wrong. This is just kind of the pattern that I would assume it moves towards if Bitcoin in particular ends up being that reserve currency in the future. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.